Happy Friday, friends. It's Shayan with Integrity Home Mortgage, back with your rates rundown for November 21st, 2025. It's been a mixed week for data, which has translated into a mixed week for interest rates. 10-year Treasury yields are sitting right around 4.07%. It's about 7 basis points better than they were last week. Mortgage rates spent most of this week slightly weaker, but are improving today. We'll call them about flat, but maybe a couple basis points improved on a week over week basis. Um, Data has begun to trickle in now that we are post government shutdown. September non farm payrolls were released this week and showed that the economy added 119,000 new jobs, which was more than expectations at around 50,000. On the other hand, the unemployment rate rose a tick from 4.3 to 4.4%. Markets took this information with a grain of salt, given just how dated it is at this point, but generally traded more off the weaker unemployment rate numbers than the favorable jobs number. Futures markets had been showing the odds of another Fed cut in December waning pretty hard, but that rebounded in the wake of that unemployment rate number, and some relatively dovish comments out of some of the Fed members. But truthfully, it doesn't really mean a whole lot right now. A month ago, it was basically a foregone conclusion. Nearly 100% chance of a cut was being priced in. A week ago, it was 60-40 against another cut. 3 days ago, it was 70-30 against another cut. And today, we're looking at 70-30% chance of in favor of a cut in December. The fact of the matter is that the Fed's next rate decision is 2.5 weeks away, and we're really not going to get much in the way of new data between now and then, at least not on jobs. The BLS, the Bureau of Labor Statistics, announced that they would not be releasing October payrolls data at all, would have been the Fed's very next guidepost. Instead, they're going to wrap what little October data they were able to collect during the shutdown into their November release, and they'll be delaying that release until December 16th, which is a week after the next Fed's meeting. So the Fed will continue to fly blind for one more meeting. As a result, there's really no conviction on what the Fed will decide to do. Not on the street, not among consumers, not even among members of the Fed. Next week is going to be a short one on account of the Thanksgiving holiday, but we will get some important data on inflation. We're going to get producer prices, retail sales, core PCE, as well as some growth measures in the form of GDP and durable goods. Mostly delayed, dated information, but still important on building a picture of the trajectory of inflation and overall economic health. So, where does that leave us? Well, the Fed has been indicating a dovish bias for some time, meaning that they are leaning towards and have been leaning towards additional cuts. If next week's data is consistent with recent history, meaning it shows growth continues to outpace inflation and inflation continues to run mildly hot, I don't think the Fed really has a justification to change that inclination. If inflation looks to be accelerating significantly, I think there's an out for the Fed that would allow them to pause. Otherwise, they've made jobs their primary issue. And without any new jobs data, it would be really hard for them to justify a change in focus. And so they've kind of backed themselves into a corner where they have to go through with a rate cut in December. Now, I don't think they should, but Jay Powell hasn't called me to get my opinions on the matter, so I guess it doesn't really matter what I think. Before you go picking sides, though, let's keep in mind that regardless of what the Fed has made their top priority, investors continue to keep one eye on inflation. Remember, the Fed only controls directly overnight rates. Long-term rates are set by markets and reflect investor expectations for economic conditions out into the future. As long as inflation is a concern, there will be a floor to how low rates, long-term rates, including mortgage rates, can go. And given the range that we've been trading for the past 3 months, that floor is not far from where we sit today, which brings me to my bottom line this week, which is super, super simple. If the Fed cut rates, don't expect that to translate into better mortgage rates. That's all I got for this week. No commentary next week on account of the Thanksgiving holiday. Have a safe and happy Thanksgiving, and we will see you next time.